Hi, everyone. This is Rob Roy, and welcome to the Elliott Options U.S. Market Update. As we do each and every week, we show you the stocks that will be featured in this recording. And it's a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in the recording. And have no fear, even though it's not on the list, we will talk about NVIDIA in this recording. All right, and talking about the markets, we did have some economic news this week, and that had to do with the release of the Fed meeting minutes. And in those minutes, it was said that there were various Fed governors that didn't rule out the possibility of a rate hike should it be needed. Well, the market isn't interested in looking at rate hikes. It wants to talk about rate cuts. So if I switch this screen, another really cool feature about this software is you can go and look at Elliott wave charts that are intraday, and we condense the chart, and then you can see there's the intraday Elliott wave. But what I wanted to do was go over and show you when this was released. And it was right here on the 22nd, right here. So I'm going to make this into the crosshairs right there. At 1 o'clock is when the minutes were released. And you can see we'd just been kind of moving sideways. And then, bam, that came out and the market sold off. We did open back to the upside. We gapped up on the back of NVIDIA's earnings and kind of closed that gap, traded sideways, and then went down again. Today we were able to go ahead and recover, and that was really important. So when we look at the daily chart here, you can see that we did close near the high of the day. But more importantly, and what I was talking to our alert subscribers to in our insiders meeting last night, that's on Thursday nights for our alert members only at evotrader.com. It was going to be very important whether we could hold this 525 level, this area that has the red line on top of that previous wave 3. We broke above it on the release of that CPI report last week. We've just been kind of consolidating. We had a big outside day yesterday. That means that the high of the day exceeded the high of the previous day, and the low of the day exceeded the low of the previous day. And then we followed that today with an inside day, which means the high of the day was less than the high of the previous day, and the low of the day was higher than the low of the previous day. Kind of odd to have back-to-back outside-inside days. What does that mean? Well, it kind of means indecision. So we're sitting here on top of this level, and we're undecided. Last week, we talked about how we had broken the new highs, but caution was still warranted. And I still feel that way. We are sitting on top of this, and the longer we sit there, perhaps the greater chance we have of moving to the upside as far as building some consolidation here and then blasting off. As a reminder, that's where the C wave of the zigzag is forecast to be. And some of you said, I couldn't see the wave 5. Well, there it is. It's over here. It's all the way out to September or October. I'm not sure it's going to take us that long to get there, but it is before the election. Those of you that watch election cycles know that normally election years are good years. It's not one of the primary things I follow, but I mention it because other people do. I'm more focused on hitting this first target, which is that C wave extension at the 550 level. So can we continue to move up and do that? We have a holiday week coming up. As a reminder, the markets are closed on Monday for Memorial Day. Thank you to all for your service, etc., all that you've given for our country. We appreciate that. Hope everybody has a great Memorial Day weekend. But taking a look at the TNX, that's been a little bit of an issue here. Where we have kind of ticked a little bit back to the upside here on rates. I've been mentioning to you that although we have a well-formed 5-wave pattern here in the Elliott wave, I just don't see the catalyst to drive rates that much higher. Well, getting the Fed governors to come out and talk about they're not afraid of rate hikes, that certainly helped to add a little bit of a bid to rates. And if we get more Fed speak along those lines, we have the PCE report that comes out on the 31st. Not a whole lot of economic data before that. Holiday shortened week next week. So I think we kind of just tread water here. And I'm hoping that rates just kind of stay in this range between these two fib levels here, go a little bit more sideways. Maybe the market continues to consolidate there until we get to that big PCE report. That's going to be the next big market driver, I think, unless something unexpected comes out in the near future. Taking a look at the VIX reminded me that I forgot to show the chart of the VIX last week, so I want to make sure that I add that in. You can see that we are in this expanding triangle here, right around that 12.5 level that's acted as support basically for this entire year. And it was noted in some of your comments when you think that the likelihood is that we're going to bounce back to the upside. Perhaps. Remember, a triangle means you can move either direction. We are sitting on support. And throughout this year, we've gotten a little bit of a bounce off that support level. So that certainly could happen next week. But I also want to remind everybody that we have traded below this level just because it's acted as support the entire year. We've been down below 10 in past market rallies. So the possibility still exists for a downside breakout of the VIX, which would certainly coincide with an upward move in the markets. But maybe we have to wait all the way to that PCE report before we find out more about that. Let's take a look at the chart of the dollar. If we look at the dollar, you would imagine that it's been moving a little bit upside to the upside as well on the back of the interest rates. Interest rates finding a little bit of a move higher is going to help support the dollar. And once again, a pretty well-formed 5-wave pattern here. We don't want to see this if you're long the equities market. You don't want to see rates go up and the dollar go up. That would be a double whammy for specifically the big tech stocks and the market in general. But we can't discount how well these patterns are set up. And there's the dollar going out to September, October. I just don't think these two can work hand in hand. I don't think that we can see the S&P go up and hit the wave 5 high in September, October, and the dollar move up there. It seems counterintuitive. So I feel like one of these is going to relabel, but patterns are still looking pretty good at this point in time. We take a look at the chart of the Qs. Surprisingly good, really, with a flip up in rates. You might have thought that we might have come down and broken below that support level, but we're holding above it, also closing near the high of the day today and getting close to that previous wave 5 high. Look at that extension, though, 149% on the wave 5 high. It's getting awfully extended on that wave 5. If we are going to continue higher, I would think we'd see that relabeled to a 3. Otherwise, perhaps the wave 5 is done if we start moving lower, if we break below 450. But I just want to be clear here. You stay long the Qs as long as we hold above 450. We break below that, whole different story, because we haven't come down and tested that point of the triangle yet. And that's Elliott wave corrective triangle rules. It works the same way as it does with gaps. They get filled. We don't always know exactly when, but normally it comes back to that point. But that could be well off into the future. But it still exists there, and a break below 450, then we have to start talking about that being a possibility. But for now, the key is stay long the Qs as long as we're above that 450 level. Looking at the IWM, and boy, we tried to get up there towards that 210 level, and we were wondering last week, could we break above it? Could we break above it and start a new trend? The IWM loves to move in these 20-point ranges. It's been in the 190 to 210 range all year. It was there a year or so ago before we dropped down to the 170 to 190 range, but we couldn't do it. We got up right up to that resistance at 210. We moved back down. At this point, we've held the 50-day moving average, which is that royal blue line. So far, we've held that and bounced back up. But note, even on today's high, we didn't even get above the 10-day moving average. We just hit the 10-day moving average on the high. So it leaves in doubt the possibility that maybe we come all the way back down to test the 190 level. Maybe not. Maybe the 50-day moving average holds and we turn and we head back up and try 210 again. We do have a little bit right through here, right through the middle there at 200 of consolidation. We didn't quite make it down that far, but it's going to be interesting to see next week, I think, more than anything else, whether or not the IWM goes up and tests that 210 level or if we head back down towards 190, as I said. So that covers off the markets in general. I do want to look at cryptos because they've been in the news. Let's take a look at Bitcoin. And if you haven't gotten this software yet, go to hub.com. Maybe you've been under a rock. You haven't heard about it, but it's the new version. I just showed you. You can get live Elliott wave, intraday Elliott wave on the charts. It's a fantastic piece of software. They've added in the cryptos. Now, that's just for us that are using it right now in the early beta form. The beta's in 2 steps. We get it first, and then we take a look at it. And if we don't find any major problems, then it goes out to everyone else that has it in beta form. And so you can get it right now for free while it's in beta. There's nothing to download. It's web-based, so go get it. And you will have this very soon. I had an update from the data providers, the programmers over at Hub yesterday, and this will be available for everyone in beta form soon here. So I wanted to switch real quickly because Bitcoin stays in this range between 60 and 70,000. But the big news in Bitcoin world has been Ethereum. Look at that move. This also goes to the fact, I've told you all this in the past, that even though this was a descending triangle, and there's a lot of misinformation about triangles that exists out in the market, a descending triangle does not mean a downside breakout. Any triangle, descending, symmetrical, or ascending, can break either direction, and there's your proof. Big descending triangle in Ethereum, and it broke to the upside. There was approval of the Ethereum ETF, and that's one heck of a move. The crypto people that I go to for information that know more about crypto than I say that Ethereum is going to be the place to be moving into the end of the year. It's going to have to get above 4,000 first, but we're back up there testing it. Now, we did it rather quickly, so we're a little bit overbought here on Ethereum. So far, this sideways consolidation is what you want off of this big vertical move here. Let's allow the 10-day moving average to catch up, maybe some more consolidation under 4,000, and see if we can break above that level, and Ethereum would be off and running. So pretty interesting stuff going on in the crypto world. As we move into chart of NVIDIA, certainly in the news this week. I told you we'd talk about it. They had their earnings report, and this reminded me of the old days. They used to talk years and years ago when stocks would have their earnings forecasts, and there would be the whisper number. And that was always likely going to be higher than what was reported. Well, the revenues were forecast to come in around 26 billion, but the whisper number was 28 billion. Well, NVIDIA came in at 28 billion. So normally it would have just been, okay, it's kind of in line. No question it was a good earnings report, but it wasn't a smashing blowout report for the fact that they kind of hit the whisper number. But they announced a stock split. So there's a 10-for-1 stock split coming up. And for those of you that might be thinking, okay, well, we had this big gap up, we're going to trade NVIDIA down towards that 10-day moving average here and fill this gap. But just a quick reminder, the fact that they announced a stock split changes the game. Who wants to sell this stock in front of a stock split? I believe it's June 7th is when the split is going to occur. Then things could change. Oftentimes, especially after these big splits, people sell some of the shares and keep some. And normally you get a little bit of a move down before it takes off again, because the idea of a stock split is to make it more attractive to more traders. You got a $1,000 stock. Not everybody has $1,000 to buy one share of stock. But I just wanted to caution you on thinking that this is going to be an easy downside trade next week. I think it likely maybe some backing and filling a little bit, but I think it mainly holds these gains at least into the stock split, and then we'll see. But that was one heck of a break out of this ascending triangle that it had, and I do think that it had a lot to do with the stock split. I really wonder how it would have acted if we hadn't had the stock split along those lines. And just as a quick reminder, this was really talked about in NVIDIA all week, and specifically in Trade Finder. Everyone was talking about it during Trade Finder on Tuesday. And if you haven't signed up for Trade Finder, you can do it with the link that you see on your screen now. We do it during live market hours now, so we take advantage of the live Elliott wave charts. It's at 1 p.m. Eastern time on Tuesdays. We look at the markets, we look for trade ideas, and we have a live Q&A. It's a great session. We have a great community. Look forward to having you join us if you haven't already. So, yeah, there was no shortage of talking about NVIDIA on Tuesday's Trade Finder in front of the earnings announcement. All right, now as we go to some stocks of interest, and just as a quick reminder, when we look at these stocks of interest, and I'll start off with SQ here, each month this year, we're giving away one of our level 3 subscriptions, and that includes our AI-based impulse strategy. So that's a directional strategy infused with AI, our volatility strategy, which looks for breakouts from the triangles, and then our AI-based time strategy, which is an income-based strategy where we're expecting stocks to stay sideways, and we do calendars, butterflies, things like that, designed to generate income. And we're giving away one of those every single month this year. This is the last week that you can get registered for the giveaway this month. All you have to do to register is leave a comment underneath the video. That's it. You can say whatever you want to say, but just leave a comment underneath that, and that puts you in the drawing. That's worth thousands of dollars. So good luck to everybody. Make sure you leave a comment under this week's video. And then I read every single comment that y'all write. I respond to as many as I can, time and travel permitted, but I read them all. And then when you ask about particular stocks, I include as many as we can. Remember, we have limited time. So if yours isn't viewed, don't think it's not a good one. I just put as many of them as we can in with the time allotted. So you ask about SQ. So here's SQ. You can see we had this symmetrical triangle here. Last time we looked at it, and that's another cool feature. The software remembers what you've done the last time you looked at it. You don't have to go back and redraw the lines. It reminds you of it. So it's really neat. So we had the wave 5 went right up to that wave 5 box you would expect because it didn't move past 100%. Basic Elliott wave terminology, basic Elliott wave rules. You don't go up past 100% on the wave 5. You're going to come back down to the previous 4. And that's where we are here on SQ. So we'll see if we can hold 65. If we break it, maybe we still hold exactly where this wave 4 is, which was right at a 61.8% wave 4 correction. So there's a lot of support right here in this 64 to 65 range on SQ. And we're a tiny bit oversold here. We'll see if that hangs in next week as well. Perhaps you could take, if you are a really speculative trader, I usually like to talk about the difference between being aggressive and conservative. If you're really aggressive, you might take a flyer here to see if this support holds and at least get a bounce back up towards that 10-day moving average. If you're more conservative and looking at this, you want to wait till it gets above the 10-day moving average, at least, if not back above the 50-day moving average. So that's what you would be wanting to look at with SQ. Taking a look at the XLF, I do think that was a good suggestion. We want to see what the financials are doing. And as you would expect, with that little tick up in rates, financials came down. Financial stocks do better when rates are lower. So interest rates tick up. You see the financials come down. Once again, the wave 5 right in this tap box. So Elliott wave nailed this move as well. Pretty extended wave 5 at 121%. So we'll see how far we come back down. We came back down to the lower end of it before and had, look at this nice little zigzag pattern to the upside. And we'll look. Now, remember that we don't get a full retracement to the previous 4 when we have a greater than 100% extension. We only look for a 61.8% corrective level. So perhaps we'll keep an eye on this. And if we break down a little bit further, we'll look and see where that is. But we need to see what rates do. And if rates calm down, then perhaps the financials calm down. But they're going to really trade along the lines of what rates do next week. Y'all ask about AMD. We show this one periodically. It's certainly a viewer favorite. And we are right up against this resistance level at 170. You can see where it was support. We traded right through it back at the beginning of the year. Too vertical of a move. This is one of the rules you hear me talk about all the time. I hate it when stuff goes vertically up because what happens? Say it with me. Oftentimes comes vertically back down, which is exactly what happened with AMD, even though they mentioned the magic letters AI. So we came back and we held that 170 level and then gave it up. Well, now we're back testing it. So what was once support is now resistance, and we need to get AMD back above 170. That wave 4 is hanging on by the thinnest of margins. The last fib level that counts for wave 4 is 78.6. And we're just right there. You can see 77.6. So barely hanging on to a potential wave 5 target, but that's a ways away. The first thing that needs to happen is we have to get back above 170 with follow through. So that's what you're looking for. So you need a follow through or confirmation day. So we need 2 days back above 170. And then I think you can start looking long again on AMD. But for now, I think a little bit of caution is warranted. Looking at GPN. And y'all ask about this one. Not the best looking chart here. Global payments. We tried to hold in this area here around the 110 level. And you can see that's acted as kind of a support area going back. And now we're moving down to the next level. So 110 there was support resistance for a while. And now we're coming down to the next area of support, which is around the 100 level. That's a big round number. We are just a tiny bit oversold, as you can see from the 10-day moving average right now. But I would be really surprised if we don't see GPN hit 100, and then we'll see if that support level can hold and we can get a bounce from there. We had nice consolidation at 110, but it couldn't bounce from there. So let's see if 100 can hold and maybe a bounce further from there. But that's a pretty ugly wave 3 to the downside so far. So watch 100 and see if that holds in there. Some of y'all ask about T and some of the dividend paying stocks. I remember years ago, dividends were the big thing. If a company announced an increase in their dividend, that stock price went up. Dividends were the thing. That's been replaced, though. People don't watch the dividends as much anymore because the stock price gets reduced by the amount of the dividend. We're more in growth mind, especially with what's been going on in the high tech, et cetera. So we kind of get forgotten in the whole dividend world, and companies have gone more to stock buybacks. So that's what's looked at more favorably, is if the company announces stock buyback rather than a dividend. But if you still like the dividend paying stocks, you can see that we did have a move back to the upside. Again, textbook Elliott wave stuff here on AT&T. The wave 5, less than 100%, went right to the lower end of the tap box range. What's it supposed to do? Come back to the previous 4. Well, it just did that. So that means that entire scenario is over. The wave 5 has ended. The corrective move expected back to the previous 4 has occurred. That means a new pattern is starting. So what's happening now on AT&T is that is a new impulse. Now, it's not labeled yet, so we'll have to wait and see how far this. It's an A wave. I like to label those myself. You can allow the software to do it. I have them turned off, but they'll do it for you if you want. But this is an A wave to the upside here. And now we have to watch, because on AT&T, we're right here against resistance at 1750. And perhaps that's the start of a B wave correction, or maybe we get an extended A wave higher and it moves above that. But that's a lot of resistance there at 17.5. So I think AT&T may struggle a bit, but it would certainly be impressive if it is able to break above that level. We do have a positive 1030 cross here. So let's see if we can get above 17.5. And I know that these weren't on the list either, but they're in the news. So a couple more bonus ones going into a holiday weekend. We want to look at natural gas. We looked at it last week. We did have this move here to the upside where we broke above 20, but we gave it right back today. So you want to make sure that you're careful there. If we could have had a follow-through day, and that's why I talk about these rules. You can see we broke above it yesterday or on Wednesday, and then we opened higher, but no follow-through. We closed lower, so we didn't have a follow-through day yesterday. So that negated the breakout, and just as should happen, we're back below support. So now we have to start all over again. So the key here on natural gas is, can we hold 17.5? Can we hold there and then try another run to move higher? But the interest there is waned a little bit. All right, so as another bonus, I did want to show you USO as well. We can see that we're still in that expanding triangle. So just a quick update there. Nothing really to talk about. We're still holding at 75. We're in this expanding triangle. We'll talk more about USO when it makes its break one way or the other. The expanding triangles work the same as corrective triangles. You get a break to the upside or the downside. It's just the point is over on the left-hand side instead of the right-hand side, as you're used to with the consolidating triangles. And then last but not least, some of you ask about looking at the Nikkei. So I wanted to add in the EWJ. So let's take a look at Japan from the chart of the EWJ. There's pretty interesting things going on there. And I did want to show you this chart because you can see that we have a triangle here as well. Look where that wave 4 is, right at a 50% correction. And then we have a pretty decent symmetrical triangle. It's not huge. It's only about 2.5 points wide, but it's well formed. Now, this is where the key comes in. You would be tempted to say, okay, the wave 4 held right at 50%. That's a good, strong level of support. This triangle is highly likely to break to the upside. But remember the Elliott wave rules. And Elliott always said, this trumps the Elliott wave pattern. Even if you're in a scenario like this, where it looks like it's a great wave 5 pattern to the upside, understand the triangle can break either direction. So we need to see where the EWJ is going to go. Which way are we going to go? And notice that the 10, 30, and 50-day moving averages are all exactly at the same spot, right in the point of the triangle. We are going to get a breakout very soon here in the EWJ. We just don't know what direction it's going to be. So we'll keep an eye on that one moving forward once it breaks out. So again, enjoy your holiday weekend, everybody. Look forward to talking again soon. Take care. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.